Welcome to SpeedyPodz Episode 4. Today we're jumping into the dynamic world where business meets artificial intelligence. We'll cover quite a bit: surging tech revenues from AI, some economic headwinds hitting industries, and even a pretty wild AI discovery and longevity. The goal here is simple: get you quickly up to speed on the big market shifts and what's happening beyond. Okay, so let's start with some of these tech sector moves. Alibaba, for example, they reported some really impressive growth.
Yeah, they did. What's really striking is how fast AI is translating into actual revenue for companies like them. Their AI-related products saw, I think, triple-digit percentage gains.
Wow, triple digits.
Yeah, and the cloud division, that jumped 26% in sales.
Right.
That's very closely tied to the demand, sparked by things like DeepSeek and other advanced AI models.
Okay.
So it definitely helped calm investor nerves, especially with all the competition they face. It shows AI can be a real revenue engine.
Right, a direct impact. But then on the flip side, look at Dell. Their stock actually dropped even though they beat their top and bottom line estimates. What gives there?
Well, this is where it gets interesting. It shows how the narrative around AI hardware is shifting a bit. Dell booked fewer AI server sales compared to the previous 3 months, and maybe more importantly, they missed profit margin estimates for those specific powerful machines.
So it's not just about selling the hardware anymore.
Exactly. There's definitely a boom in demand for the high-powered computing needed for AI. You see it with Dell, Supermicro, HP, all of them.
Yeah.
But investors are now looking past just the raw sales numbers. They want to see sustainable profitability from this AI infrastructure.
Mm-hmm.
So even though Dell boosted its annual outlook overall, those AI server orders, and crucially the margins on them, are what everyone's watching now.
That's a really key distinction. Profitability, not just participation. Okay, contrast that with Autodesk then. Specialized software, right? Architecture, engineering.
Yeah, completely different story there. They really impressed Wall Street. Strong earnings report, they raised their guidance.
They got those big price target upgrades too, I saw.
Right. It highlights that while hardware margins are under the microscope, specialized software leveraging AI can show really robust, high-margin growth. It's not a one-size-fits-all AI boom.
Makes sense. Now, shifting gears a little, AI isn't just reshaping companies, it's getting tangled up with government policy too, like this U.S. government move with Intel.
Oh yeah, that's significant. The government taking a 10% stake, non-voting, in Intel. It's tied to the CHIPS Act, the push to bring semiconductor manufacturing back onshore.
So instead of just grants, they're taking equity.
Precisely. It allows the U.S. taxpayer to potentially share in the upside, if Intel does well because of this support. It's framed as national security, securing that critical chip supply chain. But it's passive, no board seats, no governance rights. Still, it marks a different kind of public-private interaction in these strategic areas.
Interesting. A move from grants to stakes. Okay, while all this innovation is happening, the broader economy still has its challenges. Let's talk about those headwinds. Caterpillar, for instance.
Right, CAT, often seen as a kind of bellwether for the global economy because they make all that big mining and construction gear. Their shares fell because they warned investors that tariffs are going to cost them more than they initially thought. About $1.8 billion this year.
That's a big hit, and it signals friction in global trade, right?
Definitely. It underscores how these trade policies ripple through major industries and can drag on profitability, potentially pointing to broader economic slowdowns.
And that pressure seems widespread. There was that S&P Global report, more corporate bankruptcies.
Yeah, the highest number of filings in 2025 since way back in 2010. It really feels like the unwinding of what people call the ZRP era, the zero interest rate policy.
When money was cheap.
Exactly. Those super low rates kept a lot of companies afloat, maybe longer than they naturally would have survived. Now with rates higher, we're seeing that creative destruction phase. Less viable businesses are struggling, which is how the market eventually clears things out and makes way for new growth. It's the economy sort of cleaning house.
A tough transition for some. Okay, let's end on something completely different, but also AI-driven. This openai discovery and longevity.
This one's pretty mind-blowing. They used a specialized AI model, GPT-4b Micro, fine-tuned for this task. And it apparently discovered new proteins for cellular rejuvenation, making cells young again, that are supposedly 50 times more effective than Yamanaka factors.
50 times. And Yamanaka factors were already a huge deal in that field, weren't they?
Absolutely. They were the Nobel Prize-winning discovery for reprogramming adult cells back to an embryonic-like state. So this AI finding could be a massive leap towards actually reversing aspects of aging. They're talking human clinical trials for specific diseases in maybe 7 to 12 years.
Wow. First diseases, then maybe aging itself.
That seems to be the eventual goal. It just showcases the incredible power of these specialized AI models for pure scientific discovery, especially in complex areas like drug development and biology.
It really feels like we're covering a huge spectrum today.
It's true. What's really fascinating here is just the sheer pace of change. You've got AI reshaping profits, sometimes in unexpected ways like with Dell, and at the same time unlocking these scientific frontiers that honestly felt like science fiction not long ago.
Yeah, from government chip strategies to literally trying to reverse aging at the cellular level powered by AI. It's a dynamic landscape, all right. So, wrapping this up, what does this all mean for you listening right now?
Well, maybe consider this. We see AI driving new economic forces, right?
Yeah.
Shifting company values, creating new pressures, and simultaneously, it's potentially unlocking human longevity. How might these two huge trends, economic shifts and longer lifespans, both fueled by AI, how might they intertwine to maybe redefine what we value most in the coming decade? Not just financially, but maybe, personally too.